Kia ora tātou, nau mai haere mai, and a warm welcome everybody to our extraordinary council meeting for Wednesday the 13th of August 2025. And before we get started, I'd like to ask Councillor Isabellan to open us with karakia.
Me inoi tātou. Tū taua mai I runga, tū taua mai I raro, tū taua mai I roto, tū taua mai I waho. Kia taua e te mauri tū, te mauri ora, ki te katoa, haumi e, hui e, tā kia, kia ora.
Kia ora, thank you. All right, our meeting is being recorded and live streamed on the Council's YouTube channel. And if I could just ask presenters if they perhaps just in the first instance say their name, their title to help those online. We have some housekeeping and safety procedures in terms of fire and emergency. Unlike the event of hearing any alarm, we will leave the building via the green signs and evacuate to the assembly area, which is the clock tower, Te Marahine, the square. In terms of health and safety, it's a non-smoking vaping building, and you can smoke outside the council building. Again, unlike the event of needing a defibrillator, that is located outside on the entrance to the customer service on the ground floor. Our toilets are located in the link span as people entered, and please report any incidences to our committee administration. Right, we will now move to number 2 on our council agenda, and that's around apologies, and I have an apology from the Deputy Mayor and an apology from Councillor Fitzgerald. Councillor Dennison.
Mr Mayor, unfortunately I've got to give an apology for early departure today.
Okay, hopefully we won't go for a long, long time. All right, and Councillor Dennison for early departure. All right, I'm happy to move that. Seconded by Councillor Hancock. There's no commentary. We will vote, please. Well, it's passed 13 votes for and none against. Thank you. All right. Moving through to notification of any additional items. There are none. And declarations of interest, I haven't received anything, and there is none. No public comment. So we'll move through to number 6, which is our main order of business, and that is around our local water done well and the adoption of the WSDP, the Water Service Delivery Plan. And I'll invite Chris Dyberg, Cam Mackay, and we have also Mike Monahan and Julie Keane as well, and Scott Mantz in the audience as well for any questions. So, gentlemen, it's on page 7 of our papers, councillors.
Kia ora koutou, Chris Dyberg. Today I'm Deputy Chief Executive. That's the hat I'm wearing, I think. First of all, look, just apologies in advance. I think it's clear that it's been quite a read, and at times the document is probably not easy to follow, given it's a template that the DIA created, which all it was for was them to gather the information that they needed. So there's sometimes not a lot of context. The idea with having the workshop last week was, of course, to go through that and explain what you were going to find, and in particular, the modelling and other things are quite important, and Cam will talk to that later. So you appreciate there might be a few questions along the way. So we're talking today about Water Service Delivery Plan. It's a significant milestone, has to be submitted to the DIA by the 3rd of September. It's being prepared in conjunction with our partner councils, Rangitikei and Horowhenua. Horowhenua have approved the plan last week at their council meeting, and it will go to the Rangitikei Council tomorrow to be approved. The plan has previously been reviewed by both the DIA, give us an initial view, and also by Simpson Grierson. And Simpson Grierson have issued us a letter of compliance, just confirming that it ticks all the boxes under the legislation that we're required. We're not anticipating a hard road with the DIA. We are exactly the model that we think the government was looking for. However, we want to make sure that we don't give them a reason where they can't approve it. So making sure that we're being compliant has been important. There is a hui next Tuesday at Tiranga Māori, where we will have the iwi from right across all 3 council regions to come together. I've been fairly busy over the last few weeks at various hui, particularly in Rangitikei, to help bring their iwi along, and that's been part of the engagement process to make sure that we're bringing our mara whenua along on the journey with us. The plan is to finally sign off the plan post that hui on the 21st of August. After the plan gets approved by all 3 councils, the chief executives then they sign it, and basically what they are doing is they are confirming that the information in it is correct. Just a bit of an update. You will be aware and see some of the resolutions in the paper around Ruapehu. You may have already caught up on this, but they put the notice of motion to council today to get support to rescind their decision to go with the 2 council CCO with Wanganui. That failed by 7 votes to 3. So and the good part of that is, of course, it gives us clarity that we are still with a 3 council CCO. You can go and watch that on their council website if you're interested later. It's an interesting watch. In terms of the plan itself, it is a one-off transitional requirement. And it's all about demonstrating how the council currently, the 3 councils currently deliver their water services, and how they propose to deliver those in the future in a way that is financially sustainable. And we'll talk a bit to that later as well. All the information in the plan already exists fairly much. It's all come straight out of our LTP, AMPs and what have you, so this is not a completely new view. As an example, the Nature Call project is sitting in there as a capital project, still sitting at 480 million as per our LTP assumptions. Doesn't necessarily mean that's how much is going to be spent on it, of course. The plan is a sort of a one-off compliance exercise, but it will feed into ultimately the economic regulation that the Commerce Commission uses. Their first steps of economic regulation normally around information disclosure. So they'll be probably using all of the plans collectively across the country to help them form that basis of how that's going to work. The plan must cover drinking water, wastewater and stormwater, regardless of our decision last week. It still had to cover that off, and talks about us explaining how they are going to be financially sustainable, and the target for that is 30 June 2028. So even if you didn't start off sustainable, you had to show how you're going to get there, and it must cover the 10-year period. And that's why we've seen, previously through our infrastructure strategy and what have you, a longer term view, but this was their 10 tapes all about the 10-year view. It must show how you're going to meet relevant standards. So, lots of people are very focused on, are we meeting, the water standards? When are we going to do that? Wastewater standards and things like that. So this is also, the DIR is setting, do you have a plan that will address those things? And in fact, that was one of the reasons why Ruapehu were reconsidering their decision, because Taumata Arawai stepped into that process and said, you're not putting enough capex in to address some of your non-compliance issues. And the other key thing that we need to do in there, which we'll be pleased about, is making sure that we show how we're going to support housing growth and urban development as specified in the council's LTP. So taking a good view about that. Lots in there. I'm sure you're going to have lots of questions. At this point, I'm going to hand over to Cam, who's going to just talk about some of the financials that are in the document and explain a couple of things there.
Thanks, Chris, and good morning. Good afternoon, elected members and Mr. Mayor. Just thought I'd just cover off a few points from the financial perspective. I do acknowledge that the way in which this water service delivery plan requires the financial information to be presented is different to how we have done the modelling to date. If you recall, when we undertook this exercise, we made a decision, the council made a decision to do all of the modelling based on exclusive of inflation and GST. And the reason for that was to enable comparability to the current day costs without adding in any additional inflationary adjustments and that sort of thing, which would have made that comparison more difficult. The template requires us to prepare it on the same basis as we would say in a long-term plan, which of course includes assumptions around inflation and the like. So that is one of the main differences you see when you're trying to compare perhaps the financial figures today to what you've seen previously. The second point I just want to raise as well around that is the water service delivery plan looks at the financial picture from the CCO, water services CCO perspective for the purposes of this plan. And it's looking at it together. And in doing so, when as template around financial sustainability, it's averaging the household costs per year of the three councils that are in this water services delivery plan. If you recall back to the information provided on the 4th of June, we covered off the concept of local pricing, and within that what you saw was that at least in the first 2 or 3 years before our major capital program really kicked in, particularly for nature calls, the Palmerston North's household cost was significantly lower than the other two councils. Just because the water services delivery plan requires us to show it in the way that it's described in here, doesn't stop from the water services entity when it's established from setting its pricing principles, which may include localised pricing as a concept. So just wanting to be clear on that this point here doesn't stop that exercise from being discussed at that point. And obviously because we were lower than the average, when you're looking at the average price, it looks higher than what we were showing you last time. Additionally, and it has a really minor bearing. You'll recall the modelling that we had done was based on the 2 previously and the 4, and we're going with the 3, so we're going in the middle. But the impact of Ruapehu not being part of the 3 in terms of the financial modelling is minor in terms of the size of this entity. And just one note of clarification in terms of, you'll see in there, particularly when it's looking at the debt capacity of the water services entity, you'll see a graph in there that shows that the entity exceeds the 500% debt to revenue ratio. Well, Interestingly, DIA have left that as a templated graph to go in, despite the fact that the actual covenant is FFO ratio of 8%, and the entity does demonstrate that it can meet that covenant, and that is explained also in the delivery plan. I'm sure you have questions, and at this point, I think we'll allow those to occur.
Thanks, Cam. I've got some questions. Councillor Wood.
Thank you, Mr. Mayor. Thank you, team. If we could start on page 27 of Council's papers, which is page 16 of the WSDP. Regarding the transition period and phased implementation, there's a point that discusses the timing of direct billing in regards to universal water metering. The way that it reads is that it's a fait accompli that the Water Services CCO will implement water metering. I appreciate that it's DIA's preference that the entities do that, but will that be a matter of consultation with the new entity in the community, or is a fait accompli that we must water meter? Because my understanding was it was still going to be a community choice.
I could answer that, but I just want someone who's going to make sure they get the detail just exactly right.
Page 27, 16 it's just in here. In here it's wrong.
Yes, yeah, that is a may, so it's not an absolutely will, but I guess if you listen to the rhetoric around, and particularly listening to the way that the people talking about economic regulation, it is most likely that from an economist's view, you would say volumetric billing is the best way to be fair. So I guess there'll probably be pressure through the economic regulation over time, but at this stage it's not like a definite you must have volumetric billing by X date.
Thank you, and I'm not suggesting I'm necessarily opposed to it, I'm just trying to, so an entity would consult on that with the community, or would that just be part of a service delivery plan put to council under a statement of expectation? How would that look?
It's an interesting question, and I guess one of the things that's coming through the select committee process that we just been briefed on earlier this week is the requirements for the organisation to have a significance policy. So that's not quite right, but what is it? It's significance and engagement. Significance and engagement policy, yeah. So it's not definitive exactly how, what has to be in that policy, but I guess the message that we've got is that the new water services entities are likely to look more like local government councils than they are, say, a utility organisation like a loans company. So my expectation is that there would be a lot more sort of community engagement around significant decisions, particularly relating to significant asset investments, but I would imagine issues like that may well end up falling within an organisation's significant engagement policy.
Thank you very much. Moving to the financials, this is page 140 and 141 of Councillor's papers, or 129 and 130 of the plan. There's been a lot of discussion around figures, and every report we see, we get different figures put to us. So I just want to be really clear of what it says in here to make sure my understanding is correct. So at the bottom of page 129 or 140, the second bullet point, it says, by year 10 in the current plan, prices are projected to rise to 2,500, including GIST, plus an IFF levy of at least 1,000, including GIST. So to be very clear, what we're looking at currently is a $3,500 cost per household, inclusive of GIST and the IFF. Because there's been some confusion around this before.
Yeah, so my understanding is what that section is referring to is the current LTP. Yes, that would be correct, and remembering that the IFF levy would be at least $1,000, so that's still to be confirmed there.
So on to the next page then, the first paragraph, it says at the end of it that the forecast is to reach approximately $2,493 per connection. I assume that's including GST, under the local water entity. Is that correct in my understanding, that that would include the delivery of nature calls?
That's my understanding, yes.
So am I correct in my understanding that this entity within 10 years would be delivering a cost to the average consumer of approximately $1,000 and $1,007 less per year. Okay.
Yes.
Can I understand if that figure that's at the end of that paragraph is under an assumption of local pricing or under an assumption of, what's the word, not rationalisation, harmonisation?
Harmonisation. Rationalisation. Harmonisation.
One of the Asians.
Yeah, that would be based on the harmonised price at this point, yes.
And so if it was local pricing, the assumption is that would be lower for Palmerston North residents or higher?
I don't have that to hand, but given that it's pertaining to Palmerston North residents, it
It'd be about the same.
yeah, could be. It could be either. It just depends. I haven't got that particular part to hand.
Thank you. All right. Moving into the projected financial statements. So if we go to page 173, or 162 of the Water Service Delivery Plan, I just want to get an understanding. When we look at payments to staff and suppliers, I see there's a big jump from financial year 26-27 to 27-28, from 32 million to 46 million. I assume that's an assumption of when the entity comes into force and full, so it's hired all its staff, it's hired all its systems, yeah. Is that correct to explain the significant jump between those 2 years?
Yeah, I believe that would be correct, yes.
Okay, and does that explain why within 10 years we're predicting that the cost of this entity will almost double from 31.3 to 58.8?
Yeah, plus also remembering that these are inflated, so yeah, you'll have the cumulative effect of inflation.
Okay, and so when we look at the operating expenses ending up around 58.8 million, assuming inflation might account for, say 10% of that over 8 years, what's driving the key increases in cost estimation? Is it the expansion of the entity over the long run? Is it staff wages expectations? What's driving this significant increase in expenditure?
Outside of inflation, I would assume that it is to do with ensuring that the water services entity is delivering to the requirements set out in terms of regulation. So it's more around the service delivery than I would think around necessarily just staff per se.
My last...
Sorry, I'll just...
Yeah, just through the mayor, just check as well with the team. Would it potentially be the Nature Calls project around about that time in terms of additional supplies driving that cost up as well?
Yep, that would be part of it too.
I'd also just like to add that is the entity's financial, so there are some other operating costs from Horowhenua and Ruapehu, and they also, so it's not just Palmerston North's operating expenditure at that point, it's the combined CCO, and the inflation would be probably a little bit higher than 10% by year 10 if you think about 2% per year for 9 years. Cumulative, yep, so it would be a bit higher than that.
Thank you. So my final question there, given that the finance costs are separated, so a large amount of the repayment costs associated with Nature Calls will be encompassed in that column, given the promise of these new entities is that they'll be able to operate more efficiently, because rather than needing 3 water services managers, you can have 1 rather than 3, etc., where would you expect a councillor or the average person reading this to see that kind of efficiency reflected in the financial figures?
It's hard to see, and I suppose it comes back to my comment before that this is not really designed to try and sell the proposal. It's more designed specifically to try and explain what this particular entity looks like, not in there's not a lot of comparative. So I guess the modelling that we've talked about previously and in here estimates, and this is without the cost of the IFF factored in, so this is assuming debt through the LGFA, I think, is over $100 million worth of savings over the 10-year period. The 106 is the figure. So while in here you're seeing revenue growing quite a lot, you're seeing costs grow quite a lot. What it's saying is, but net of that, you've actually saved over $106 million.
Excellent. Thank you very much, Mr. Mayor.
I'll just add to that. Just to add to that as well, I think Councillor just coming to some of the points that the team are making there. One of the key things as well is about when councils are setting the statement of expectations and what sort of efficiencies that they're wanting to drive through these organisations. This is based on long-term plans and asset management plans and forward about what's in play at the moment. I think there was an example provided previously about Watercare in Auckland, about when that entity came together and the council setting an expectation about what sort of a level of efficiencies need to be driven into the organisation. I think that those leaps that you talk about in there are probably prime examples where that detail needs to kind of be fleshed out more in those expectations of what the elected members expect to see from these organisations.
Maybe I'll just jump in and add to what the CE just said. So that's a really very good point. So in here is, especially if you look at the capital projects directly out of the LTPs, they still include, nature calls it 480 million, which is, as I said before, there's also a couple of quite significant capital projects around the other council areas, including Martin to Bulls wastewater treatment plant upgrade, which is in there at circa $100 million. So it doesn't factor in how that might be value engineered down, and Ursula certainly respond to new wastewater treatment standards, and their expectation is that would come in substantially lower. So I guess my view of this is that what we've got here is a relatively conservative view for the organisation. So even though we know when you get into it you're likely to find more compliance issues and things that you have to deal with, the organisation, as it's shown, has already got reasonable headroom to deal with what's in the plan, and we know that the plan is reasonably conservative, and that more room can be found.
All right, Councillor Barrett.
Thank you, Mayor. Thanks, Chris and Kim and Julie and Scott. Bigger and bigger team. A few questions. Just interested around the implementation side of things in page 30 on our agenda. It's broken into 3 phases there. And in the second phase, it talks about a water services strategy and an associated charging regime being signed off by June 27. Can I just understand how that charging regime would be developed and who ultimately would be approving that?
So by that stage you will have, of course in late, mid-calendar year 2026, you'll have a board establishment board on board. So it will be the board's job to develop the strategy. But as I said earlier, it would be, there would be, I believe there would be significant consultation in relation to the strategy. So I don't think it would be something they just go into a closed door room and make up.
Thanks, but the charging regime would then be being set by the board of the entity rather than by any council.
So there is a statement of expectation, and the first statement of expectation is due sometime that year as well, and that is something that the organisation will be required to take into account in developing its strategies and plans. I think the other thing they will obviously need to take into account is regulations. So initially it's reasonably light-handed in terms of information disclosure, but ultimately the Commerce Commission will have more of a firm hand in terms of that, and will be wanting to see that that things all line up to be able to deliver efficiently, but also to meet the appropriate standards. So yeah, look, I think, and it could be up to the councils to decide in their statement of expectation, or certainly in the foundational documents too, as those are drafted, is about how much input those councils want to have to those sort of decisions.
Thanks. So in terms of the current way that we gain revenue is a flat fee from each, on a residential side, is a flat fee from every household, which obviously has affordability constraints at the lower end of the property market. Is our intent to continue forward with that structure where it's a flat fee, or will we be looking at other options?
I think it's far too early to say, what might be in the thoughts of the organisation, but I just again say that I think through the statement of expectation, you know, there is the ability for councils to signal to the organisation about how it might want to approach those things. For instance, I know some councils are already talking about wanting to have you know, harmonisation within their area. It's not across all the councils, but certainly, you know, within a council area, there's some we'd like to signal through the statement of expectation. So those are the sort of signals that I think could be given to the organisation to help it deliver a pricing strategy that sort of, you know, met the needs of all the key stakeholders.
Sorry, can I just add to that, Councillor? Kia ora tātou, Julie King, Transition Manager. The water services strategy is something that's been quite heavily considered by the Select Committee and something that they have recently come out with, and we last week, or this week actually, had a webinar with Simpson Greason to understand a few more of the intricacies that sit in around that. The Select Committee report recommends that the water services strategy is something that is actually publicly consulted on. So not only will the council as the shareholder have the opportunity to feed into that, but so also will the public. And I think it reflects the importance of making sure from an affordability point of view that the community still has an opportunity to input into it at that stage as well.
Thank you. That's helpful. I saw in the report that there's a DIA indicative guidance around affordability at 2.5% of average income. Do they have advice around affordability thresholds at the lower end of household incomes?
I don't think we have information on exactly how they came up with that, sorry.
I also don't have any information, but I just would like to clarify that it's median income, not average income.
Thank you for that clarification. Just want to understand a little bit about the draft legislation in terms of its provisions around paying dividends to shareholders and kind of scenarios where dividends may or may not actually become part of the story.
Yes, good point. So the intent is at the moment that the legislation would allow for dividends to be paid. I think the view of almost all commentators is they don't envisage you know, dividends to be an issue, certainly not in the short term and probably not in the medium term. It's unlikely to see, you know, I struggle to see a scenario where you may want to get dividends out of the water services entity. So a few things there. Like I said, they're more like a council than a utilities company. So unlike utilities, like the electricity utilities that may go and do sort of unregulated services to sort of make more money, water services entities are restricted to sort of stick to their knitting, you know, in terms of deliver water services. So, you know, the other thing to sort of take into account, of course, is they will be under the control of economic regulation, which means that, you know, the returns they'll be able to get will be regulated. You know, there will probably be, you know, weighted average cost of capital type sort of metric that they will be said, this is what you can use to set your prices. It is hard to see how they'll be in a position to pay dividends, but I guess what the government is saying is we're not saying at this stage, you know, you couldn't. I think the other thing just to keep in mind in relation to that is the limitations on who can be a shareholder. So it's not like all of a sudden some investment bank might come along and say we'd like a bit of a cut of that, you know, we'd like utility returns, and you know, and drive it to pay dividends for, you know, for itself. So, you know, there is, and that's all about making sure there's no ability for the water service entities to be privatised. So yes, it's there, but the reality is, has it got any practical application we can think of? And the answer is no.
Great, thank you. And just finally, at this stage at least, I think just back to Councillor Wood's questions, water meters, do they feature in our budget over the next 10 years?
Sorry, so what is what, sorry?
Do water meters feature anywhere in our budget over the next 10 years?
There are, so Horowhenua, so talking about the plan, Horowhenua is in the process of rolling out water meters in Levin and their area. I don't think Ruapehu here have any plans at the moment, and what we are doing in Pumps North is rolling out.
Rangitiki.
What did I say? Oh, yeah. Sorry, Freudian slip. Yeah, neither is Rangitiki, by the way. And Pumps North, we are rolling out a Toby replacement project, and what that is gives us the ability to more cost effectively roll out water meters in the longer term, but there are no current plans for water meters apart from the commercial ones that we already have.
So do we know in a rough order how much water meters would add to the budgets that are already being used to calculate the price at point of delivery in future years?
Look, I've only got some sort of rough figures that I've heard, but and again, it depends if it's net of the Toby replacement project or not. I think once we've done the Toby replacement, the cost might be sort of in the order of a couple of $100 per house to put a meter in, possibly less. If you were paying for the whole thing, you would be looking at maybe 500 in terms of replacing the Toby at the same time.
Great. Thank you all. Mr. Mayor.
Councillor Bellin.
Thanks, Mr. Mayor. Thank you. I just wanted to pick up on the dividends question of Councillor Barrett. And on page 158, it says any cash surpluses generated would firstly be applied to the payment of financing costs and secondly towards renewals. So in that context, would dividends be like a third consideration, assuming that those were all sufficiently satisfied? Or is that why they're quite unlikely?
I would say, given the debt profile displayed, it would be unlikely that there would be sufficient surpluses for dividends, and the fact that we're not mentioning that there is a third for dividends here would indicate that we're not seeking dividends.
Great, thank you. Just on that same page, 158, there's reference to debt being drawn down through a mixture of debenture stock, and I wondered, are we anticipating, or I want some assurance, I guess, that the debt funding is primarily coming from LGFA, or are there other lenders that might come into the picture?
Through Mr. Mayor, I would envision that it would be all through LGFA, given the rates that they provide. For council's business, we have to sign debenture stock as well as a portion of the total debt. So that's in line with LGFA's borrowing requirements.
And is that stock secured against the ability to levy charges rather than the assets as it is in our long-term plan?
Yes, yeah, it operates the same way as it does for the council.
Great, thank you. That's all my questions.
Councillor Naylor.
Thank you. Just starting on page 226, the costs of change are outlined as 4.25 million plus 11 million being like total 15.25 million. Now, when we had the workshops over at Conference and Function Centre, they indicated that we'd be looking at I think it was about 5 to 7 million, so this is more than double that. I'm just wondering why that's changed, or whether the indications were wrong then, or why it's so much more than that now.
I recall the conversation at the time, and that amount that was quoted was in relation to the transition costs only. It wasn't intended. The amount there was just for the transition costs, or everything else was assumed to be effectively BAU in terms of ongoing development of the organisation. So in the modelling, it's I guess it depends how you look at it, but it's that first piece that's considered to be the transition costs.
Okay, thank you. And just moving to page 156, where the average charge per connection is outlined over the next 10 years, and thank you for the answers to questions that were sent through this morning, which I think you said those include GST and inflation, and doesn't take into consideration local pricing. So given the difference between, is there any reason for us to expect that our local pricing might be any less than those averages? And if so, why?
Certainly, if you're thinking about, so in the material provided previously, it showed in today's terms compared to the other councils how local pricing for PNCC compared. Certainly in those early years, we had a significantly lower local pricing. That I wouldn't imagine would change. I suspect we would be closing in on the average when you factored in the level of investment we require for nature calls. But remembering we're trading off not requiring an additional special purpose vehicle at higher financing costs to fund nature calls under this approach.
Thank you. So by the time we get to year 10, where it's 3,374 per connection, would we have any reason to expect that Palmerston North costs would be any less than that by that stage once we've had all that capital program investment?
I think when you're looking 10 years in advance and you're looking at the cumulative effect of inflation within those figures, it'll be very difficult to be able to say that it's definitely going to be in around 3,300. If inflation comes in lower, the efficiencies in terms of in terms of procurement and looking at the changes to wastewater standards, for example, there is definitely reason that price could be lower in 10 years' time.
Okay, thank you. And just moving to page 141, where Councillor Wood was looking at just before, where it's got the outline for Palmerston North City Council is reaching approximately 2,493 per connection over the 10-year period. I'm trying to understand, I mean, that's $880 less than the 3,374 that's on page 156. I'm just trying to understand the difference between the 2,500 and the 3,300. Why such a big difference? Because I would have expected those to be similar.
Sorry, I'll take that one. That one, where you're looking on page 141 is specifically Palmerston North City Council, whereas page 156 is the whole CCO together. So they're two different sets of numbers because we have to identify the revenue and charging arrangements for each district prior to the water services CCO being
Thank you.
And if I can add to, if you recall, just mentioned earlier, some of the other councils also have some significant capital investment required, so that would be keeping their local price higher at that point as well. So that would explain some of that difference.
Okay, thank you. I guess that's why I was trying to understand if that year 10 number would be likely to be less. It just seems quite a big difference in terms of, given the population of Palmerston North being the significant number of connections over the whole CCO, I'm trying to understand how the small places would be paying a whole lot more than Palmerston North at that 10-year period. Am I understanding that incorrectly, or?
It would be difficult without being involved in another individual council's data to know exactly what's driving their charging. But remembering if you do have lower connections to spread a major capital investment across, it is likely to result in much higher charging for that area.
And don't they have a smaller connection base?
Yes. Yep.
One of the other things to sort of keep in mind is that one of the things that's become apparent to me as I've gone through this exercise of developing the plan is sort of how different the networks look in different areas. So, how a network looks in a city where you've got effectively very, very similar numbers between, connections for water, wastewater and stormwater. Stormwater is often a lot higher, but, and then you look in some of the other ones where they're quite different because, the water coverage might be a lot, but the wastewater, isn't. And then, so it can be quite, there's a lot of factors to take into account if you're trying to say, well, why would they be a bit higher or lower? Well, it sort of, sometimes the answer is depends, and you've got to sort of dig into the specific circumstances to understand. And again, of course, as so the numbers for Palmerston North are impacted significantly by nature calls, and if other areas are sort of in a part of a cycle where they don't have massive capital investment, then that'll have a big impact as well. So, look, I think at a sort of a conceptual level, you would say yes, where you've got scale, you tend to get better economics and you're going to get lower unit costs. But I think it's hard to be absolutely definitive.
Okay, thank you. Just moving to the numbers that we consulted our community on in February, March this year. In that information, it had that ratepayers are paying currently in the 24-25 year $957 for Three Waters. And in here for the average per connection for 24-25 year, it's got 1,560. I'm presuming that's because some of the other two areas are a lot higher, is that correct?
Yes, that's the reason.
And so what impact will that play when the local pricing is determined to enable Palmerston North not to have such a huge jump going into the second, third, or the early years? I mean, by 26, 27, the average is 1961, which is twice what our current ratepayers are paying for water. So would they be expected to have to pay double within the next 2 years, or will there be, or are you expecting the local pricing will reflect that at a lower level for Palmerston North residents?
Yeah, I guess it sort of depends on how the organisation sets some of that strategy and what have you, as we've discussed, which would be consulted on. But I think the biggest issue for Palmerston North, as I said, is that the big capital need over the next few years. That's going to be driving that, but each individual, if we assume for the moment local pricing is what we're going to have, and I think that's probably the best assumption you could make. I think you're still going to see those sort of dynamics that Cam has provided in his answer earlier today in terms of how those sort of graphs. That's probably as good an indication as you're going to get in terms of how those will track. But the capital is the key thing that's going to impact Palmerston North in the short to medium term.
So the answer to the question about whether our current level, being 957, whether that will impact the negotiations around local pricing, say for 2 years' time, or would we expect it to be doubled? I'm sorry, I'm not quite understanding. Yeah, I understand the investment of nature calls, but what I'm looking at is quite a steep increase for our ratepayers based on what's on page 156 here, as compared to what they're already paying, and I'm trying to understand what that will mean for our local community over the next few years.
Yeah, so just to also clarify, over the next 2 years, the individual councils will still be rating for their services. So the timing of the uplift in terms of charging is likely to tie in with when the Nature Calls project at the moment in the long-term plan is scheduled to commence. So I think the shareholders would come to some sort of view around the pricing approach, and I can't see why local pricing might be not be that might be a consideration for some period of time. That's detail to be worked out as part of a I guess, settling of the entity.
Okay, thank you. And in terms of the negotiation around local pricing that happens down the track for Palmerston North, if Palmerston North residents aren't comfortable with where that lands for them, is there any exit arrangements from this? Are there any exit options from this arrangement through the process of us consulting with our community in the coming year or two?
Yes, there is. There will be exit arrangements. Exactly how they work is yet to be determined. The key exit arrangements would be in the shareholders' agreement that will be we'll kick off the process of developing over the next few months. But ultimately, there will always be an ability to exit. And that would be something that an organisation would need to consult on. So the Act will have specific provisions around consultation requirements, and I believe one of the changes they've implemented is the need to include 3 options, not 2. So previously you'll remember we had to go out with status quo plus at least one other. The change will be, at least 2 others. Then, if you then, as an organisation decide you wanted to exit, then you need to look to the shareholder agreement and see what the process was for exit at that point.
Okay, thank you. I'm nearly there, Mr. Mayor. So in the modelling that was provided to us for the 4th of June meeting, there was some modelling around a Palmerston North CCO that was quite a bit less in the next 10 years than the joint CCO, which I think it was around $2,500 less. And then the numbers in this paper are quite a lot higher than that modelling, and I understand that some of that is around GST and inflation. But the efficiencies that have been talked about that we are supposedly going to get with scale, what year would that kick in as compared to a PNCCO? Are we looking 15 years or 12 years, or because certainly the first 10 years it was a lot cheaper.
Sorry, Council, where are those figures? I mean,
in the 4th of June agenda.
yeah, but they're not. You're comparing GST and inflated figures with uninflated figures.
No. It's been circulated. It's on your email. But
I've seen it.
That graph was the PNCCO option as compared to. It was comparing apples without apples. It was the one that's been shared that you've seen. I'm talking about the difference between the Palmerston North CCO and the dotted lines, which were the 2 or 4 CCO. So there was quite a gap. It was definitely, officers confirmed that the Palmerston North CCO was quite a bit cheaper in the first 10 years, but then from 10 to 30 years, the
Perhaps the officers could maybe answer that rather than you and I having a debate about it?
Well, you asked the question, so.
I can speak to the efficiencies in the modelling. They start pretty much straight away because you have one entity delivering one service, being water services, so the efficiencies start getting built in and get incrementally bigger almost straight away, and that's both operationally and capital efficiencies, and they start pretty much straight away. That's one of the reasons for the size and scale of the organisation. Specifically when you're thinking about PNCC, CCO, you then have to do all of your regulation and economic response and drinking water standards, etc. yourself, so you don't have the ability to spread those costs further across more connections. So that's where the difference between those 2 number sets are, if I can understand your question correctly.
So if they start straight away, where can we see that reflected in the information in the reports today? I'm just not seeing
in the back of today's agenda is the Morrison Low assumptions, and that's where it talks about the level of efficiencies that they've put in for the water services CCO for Part D and E.
In attachment 4?
Yes. 6% capital and 6% operational, and the CCO is operational from 1 July 27, so that's when those efficiencies start getting fed in. There's a little bit of runway to get to that level, but then they are they are starting to be experienced straight away.
And is that as compared to our LTP figures, or is that as compared to our Palmerston North CCO figures?
Both, because this is a 3-council CCO, so this is the efficiencies for a 3-council CCO being fed in. Palmerston North efficiencies aren't anywhere near as high, and the LTP has none but additional costs.
Thank you. So the graphs that Morrison Lowe provided for our previous decisions, has the information in our papers today been graphed in a similar way so that we can see how that looks?
No, because we've been following the DIA template for this piece of work, focusing purely on the option for the water service delivery plan.
Okay, that's all from me.
Thank you. Could I ask a couple of questions? Look, and it probably will help Councillor Naylor's line of questioning. There is going to be an economic regulator, isn't there? So to put
Yes.
fears of price hikes, price gouging, all that sort of, there will be quite a strong, I understand, a strong regulator in place.
Yes, that's...
When is that to start? Is that when 1 July 2027?
So the Commerce Commission will start, they're starting their economic regulation regime with disclosure. So I see there's been some, they've just released something in relation to Wellington Water in terms of the disclosure regime for them. It's extremely extensive, but over time, I'm not sure exactly period, they will start increasing that regulation to start doing more of a deep dive, not only into the sort of operating costs and the pricing, but also they deep dive into your capital program, and they effectively have to approve your capital program.
And in terms of regulators, when we submit, if this succeeds, we submit the plan. The DIA and the Treasury look at it, do they, as well? Well, who does this go to? What's the formal? There must be somebody in government looking at this.
Yeah, that'd be the Commerce Commission. So the Commerce Commission has the key role.
Right.
Yeah, as from an economic regulation perspective.
And then the water regulator has the tick off on the actual operations of.
Yeah, so so Taumata ROI, they set the standards, and they have a monitoring role. So you have to report to them, and like at the moment they have most of our interaction with them is in relation to drinking water. But ultimately that will, they're doing the stuff around stormwater, and then ultimately that'll also extend to stormwater as well.
Right.
Sorry, wastewater and then stormwater. So yeah.
Okay. And the cost, the transition cost, which again Councillor Naylor sort of identified, the 15 million that you said it was all. Does the board of the new board, the entities board, do they interrogate some of those costs? Because they're only budget lines, aren't they, at this stage?
Yeah, so that's right, Mr. Mayor. So you sort of start by just remembering this is just modelling. So the consultants have said, look, but based on experience internationally and in New Zealand, we expect that your costs over the longer period will be in the order of about $15 million. We know there's been a reasonable amount of scepticism about those numbers, but hopefully the board is in place in sort of 9 months or so, and they'll be scrutinising and approving those plans. There's a lot of options for the organisation in terms of that next phase of the establishment, in terms of does it start with a clean sheet of paper and buy a new ERP system, or does it try and cobble together some stuff amongst what's already there? So there's lots of paths I think that could be taken, and the board of course will be wanting to see the business cases and the justification, and then they'll be ensuring good decisions are made.
Okay, thank you. Councillor Wood.
Thank you, Mr. Mayor. Apologies, just one question after Councillor Naylor's to clarify some financial understanding. So, for a person living in Palmerston North Is the expectation today that in 10 years' time, based on this modelling, appreciating its worst case scenario with nature calls and Martin, etc., is the expectation that that person will be paying $2,493 per connection, as is on page 141, or is the expectation that they will be paying $3,374 per connection, as is on page 156? Because that is an important point we will need to be clear on.
Through Mr. Mayor, the more specific price for PNCC, which was $2,493, would be what, based on everything we know here and now and today.
So that is what they would get a bill in the mail, not $3,374?
That is my, yes.
Excellent, thank you.
Councillor Barrett.
Thank you, Mr. Mayor. Just one quick question prompted by the strong regulator commentary. This Commerce Commission is also the agency that's charged with regulating the banking industry and groceries.
That's correct.
Thank you.
Okay, colleagues, we have some recommendations. That's the questions done. Thank you to the team there. So, colleagues, we have 4 recommendations on the screen. We don't need 4 or 3, so if they could be deleted, please. And we have 1 and 2, and this is around 1, that Council adopt the Water Services Delivery Plan, Attachment 1 to the Department of Internal Affairs. 2, that Council direct the Chief Executive to certify the Joint Water Services Delivery Plan, allowing for minor changes to be made before jointly submitting the Water Service Delivery Plan with the Chief Executives of the Horowhenua District Council and the Rangitikei District Council to the Secretary for Local Government on or before 3rd of September 2025. I'm happy to move that, seconded by Councillor Hancock. Thank you. Look, colleagues, it's a lot to take in, and I appreciate some of the questions are really around the dollars and cents. Appreciate the team have put the work in. It's been a moving target. I think on page on page 30 of our documents, I think that gives us quite a good summary of the phases, and obviously phase 1 July 25 to 30 July 2026 is where the council prepares everything, and then obviously in phase 2, July 1 2026 to to 30 June 2027, it becomes a legally established water services CCO, and then 1 July 2027 is when it kicks in to the operational mode. A number of different things there around what happens with constitution, shareholders agreement, how mana whenua are involved, then obviously how the office, how the entity works, and of course all of those really important things around operational, capital plans, revenue, charging, etc. A lot of stuff still to sort out, but I mean we've taken the first step, or hopefully about to take the first step for that. So can I just acknowledge the work in the background, because it has been burning the midnight oil on many occasions, including this week, and especially to you, Julie, who have been right in the middle of it all. Thank you for the work that you've done to get us to this stage. I'm actually, rather than some of you being perhaps going to be a little bit sceptical, I can tell that's going to come, I'm actually quite excited that we've actually got a pathway now to delivering something that's quite sustainable, whereas before we were grappling, and audits and everything else were telling us that as well. So I think there's been multiple governments telling us that this is the way to go in terms of coming together, and in time I think there'll probably be some others that will be joining us as we get towards that operational model in place. So I do ask you to support it. I know it's going to be difficult for some, but I'm hoping that we might get a unanimous vote on this. Councillor Barrett.
Thank you, Mr. Mayor. Always a pleasure to have one more chance to discuss water services in this term, and here it is. I do feel the die was very much cast on this when in December we, by a majority, voted to take the single CCO model off the table prior to consultation. I think that was the only real optionality the community actually could have enjoyed in this conversation that was gone before it started. Since then, things have really moved more and more to a state where the conversations are had here, but the decisions are increasingly elsewhere, and we're now very much into a model where those decisions will be taken at other tables. And yes, indeed, my voting record has been quite consistently against the new configuration as recently as last week, against losing direct control of stormwater. But I am considering now, given that that partnership and all three waters have been locked in, seeing the need to shift focus on how we get the best out of what I still view as a suboptimal situation. How we get the best out of being contributors to decisions that are ultimately being made by others. The main thing that I'm concerned about, and you will have seen it in my line of questioning today, is around pricing. And yes, I have no confidence in Commerce Commission actually being very effective at all. The reality is the banks and the supermarkets have had them corralled for quite some time, and I'm not sure about their ability to actually drive price efficiency through a system when we already, in our own experience, have experienced how little market tension there actually is in the water services space. We now have bigger entities and fewer providers. I'm sure that many hold out hope for that, and it would be wonderful if the sorts of numbers and savings that are being predicted come to effect, but the Commerce Commission will need to raise its game considerably in terms of actually helping control price and not just looking at how they spread revenue around. I think the key question here is going to be how that pricing actually falls at the individual household level. We've had many years, certainly all the years that I've been around this council table, it's been a flat fee. Every single household in this community has paid for their drinking water and their wastewater as a set fee. And yes, that average is the median, thank you officers, the median, 1.5%. But when you actually look at it in the lower 20% of households, for 20% of homes in our community, it's already over 5%. And you look at what's actually being driven through the investment profile over the next 10 years, and that's going to be over 10%. Over 10% of household income on a flat fee basis would be simply to pay for water services. So I think we're going to have to quite quickly be working with the new entity to break the flat fee model and actually look at something that is much better related to affordability and that, yes, hopefully does start to reflect consumption so that we can actually ensure that it's affordable for everyone and not breaking those at the lower end of the socioeconomic spectrum. I am concerned as well about debt in terms of how that builds up over time, except that in the current model there's protections against privatization, but my concern is with the ratio that's being enabled, there will be a decade or two of loading significant debt up into the community until it becomes absolutely unaffordable, at which point probably the next edition of a conservative government will offer privatization of these wonderful entities through a simple law change, and there we'll have it, both high community debt and privatization on top. But that's perhaps just too bleak a view of the future, and maybe it's far brighter than that, we can hope. And finally, I will say I have appreciated indeed the officers' work on this over a number of years and cycles, and I know it's been tough at times. And I have great appreciation for the efforts that have been put in by everyone, despite my criticisms through a number of the junctures in the journey. I have been challenged by the last couple of reports in terms of getting to grips with what's in the report and what's out of the report, and I think that some of the email correspondence and would acknowledge colleagues that have been onto emails to actually prompt some of the evidence that we need to get them to the decision table. So, don't know how the whole vote's going to go, Mr. Mayor, but I am going to be voting in favor of this, although I am still quite concerned, as you can hear from the comment, but I think we are in a situation of needing to make the best of what's in front of us regardless. Thank you.
Councillor Wood.
Well, thank you, Mr. Mayor, and thank you to our team. Quite remarkably, I disagree with almost everything that Councillor Barrett just said, apart from the fact that a stronger Commerce Commission would be a good thing, and so I do agree with you there. Look, I'm quite proud to be supporting this today for a few simple reasons. Firstly, we have a legal requirement to deliver a plan. The point to turn back was some time ago when we made the decision to partner with our local councils, and so the question of turning back has passed, in my opinion. But for the simple reason that the saving to households in the short, medium and long term is quite evident. The problem this organisation is going to face is that people's memories are short. And in 10 years' time, when their water bill is $2,500, they will say, isn't this new entity horrible? My water bill before this entity was $1,000 and now it's $2,500, forgetting that what's in our long-term plan currently is a bill of $3,500. And so it will be a tough road for this new entity to walk. I don't make any light of that. But the saving of over $1,000 per household is not one that we can just sniff at. To Councillor Barrett's point of just loading debt onto communities and expecting them to pay for it, what are we doing currently? What's in our current long-term plan? We can't actually afford the debt that we need to deliver our water program, and so we're looking at setting up a special purpose entity and then charging that directly to ratepayers to pay for it. So if that is not loading up debt onto communities at an unaffordable rate, then I don't know what is. This actually, as the Mayor said, I am excited because it provides us a pathway out of negative audit opinions like we've been receiving. It provides us a pathway to significantly lower costs for our community. It provides us a pathway to $106 million of debt savings in the first 10 years alone. And if that is not a pathway you want to walk down, then I ask you, councillors, what is the alternative? I agree with the officer's comments that this is a conservative, or I would suggest a worst case scenario. For example, the $100 million for the Martin plant, or the $480 million for our plant. And we're looking at options now that range from 290 to 350. I think that the actual cost in which will be passed on to our community will be considerably lower than this, not only as our assumptions have changed, but as the new entity finds its feet and finds the areas in which it can drive those efficiencies. To be clear, my questions, I would hope, were difficult but fair, and I have a lot of respect for the officer's ability for, no matter what I ask them, to have a good, clear and quick answer as to what's going on. And I think that speaks to the huge amount of work that our teams put in and the understanding they have of what is an unwieldy document. I don't know about you, councillors, but it took me many, many hours to get through it. And for them to be able to know it inside out as to what the assumptions were, what the modelling shows and why they've made those decisions, you have my respect, and I'm incredibly impressed by that ability. I think local pricing is something that needs to be considered strongly, and I look forward to going through that process and establishing this. Also, with my concern over water metering, it's not necessarily that I don't accept the arguments as to why it might be beneficial, but I am very clear I would expect that that would be a matter of significance for consultation with the community, and so I look forward to, as we go through this process, building in what those consultation requirements are for the new entity. In terms of the councillor previous's concerns around the Commerce Commission, unless your suggestion is that Te Manua and the Regent and the airport and Cedar are all out of control, even though they've got no economic regulations, we have a statement of expectation process we go through with all of our CCOs that we all sign up for and that we all get 6 monthly reports on. And so that is exactly the level of control that we'll have over this organisation. And so it's the Commerce Commission, yes, is a backstop, but actually at the end of the day, the buck stops here at this table with our ability to influence a CCO through a statement of expectation process. So to me, the Commerce Commission regulation is good, but it is not the only way in which we mitigate and put pressure on these organisations to drive good levels of cost efficiency. So at the end of the day, Mr Mayor, this is a locally owned, locally directed, locally consulted on and controlled organisation, and I believe that is a hang of a lot of a better result than we could have potentially been facing down the track of. So I'm proud to support this for the savings it will give to our residents and for the long-term benefits that this organisation will provide to our community.
Yeah, Councillor Barrett, I've just noticed you've popped back in.
Thank you. Just noting that all the CCO examples that Councillor Wood just gave were single council CCO examples. Thank you.
Yeah, there actually is a couple of owners, different owners in some of them, but that's by and by. All right, Councillor Zabellin.
Thank you. Very short comment from me, probably. I think we have done the best that we can with what we've been given, and we've responded to every curveball and all the shifting sands and all the trickling down of critical information in very untimely ways. So absolutely full credit to our officers for everything that they've been through and all the efforts to give us what we need to make this decision. But the idea that this reform is more empowering to local communities than Three Waters was, I find is laughable. It's a bit like when you're trying to empower a toddler to make decisions and saying, do you want to wear the yellow shirt or the blue shirt? And either way, you're going to make them wear a shirt that you've provided. I think here we are at this late stage, still rushing through this work at top speed because of a ridiculous deadline. This reform is still being built. Things are still changing even as of today that do impact quite fundamentally what we're about to embark on. It's poorly rolled out. None of the red flags that I've been concerned about have been appeased. This isn't the only way the government could have approached this, and sure, we're here, we're doing what we can with what we've been given. I'm sure we will make it work because we have to make it work, but at what cost? It's not clear, so I won't support it.
Councillor Harper.
Thanks, Mr Mayor. I just want to briefly say thank you to the Chief Executive and his team for putting this water services delivery plan together. I think it's quite exciting to see a plan of this kind come together and that we can see our own, what we have to do in it, what Horowhenua has to do in it, and what Rangatiki have to do in the plan. And you can actually see it quite clearly in the years coming forward in the next 10 years. So well done to you and your team. I think it's been really well done. Concede to Councillor Zebellin that yes, there are some things in there that we don't like, but at the end of the day, it is what it is, and we have to deal with it, and life isn't good for all of us sometimes, but thank you.
Councillor Naylor.
Thank you, Mr Mayor. I do want to express my appreciation to officers who are navigating something that's really complex, and their assistance to try and help us understand is much appreciated, and certainly the answers today have been helpful. I think what's become clear to me is that sometimes it depends what your baseline that you're comparing something to has a difference in terms of where you arrive at, and it's clear that if we're comparing the numbers to the Palmerston North LTP, that yes, there are some efficiencies as compared to where we would be if we simply followed our LTP. What has also become clear to me, particularly with the modelling that came to our June meeting, is that we have lost an opportunity that I'm still really disappointed about. I share the same disappointment as Councillor Barrett in that we didn't pursue a Palmerston North CCO. In terms of the modelling that was done, officers confirmed to us during that meeting that that was a cheaper option for our community over the next 10 years. Yes, the efficiencies were going to kick in between the 10 and 30 year period. And so that decision, where we arrived to today, is that the majority view has not supported us following that path. I guess when I look at the numbers, I still realise that that was a path that was open to us and that we could have pursued. The efficiencies that are supposedly going to come with scale, I believe the officers that they're there, but I'm struggling to see that as being really evident, particularly when compared to the PN-CCO option that obviously as a council we have chosen not to pursue. We chose not to consult on them. Then we asked for the modelling. The modelling really did show that we should have pursued that one, in my opinion. For our council, for our community, we're going to need to explain to them in the coming years why their water bill has gone from $957 to possibly up to $2,500. These papers show with the three CCOs that average number could be up to 3,300, and I certainly have some assurance from officers today that for some reason Palmerston North will be closer to 2.5 rather than 3.3, and I'm yet to fully understand why that $800 difference should be cheaper for Palmerston North than the other small partners that we've amalgamating or that we're sharing the CCO with. So the thing that I do feel very pleased to have heard today is that there are exit options from this arrangement. I'm also pleased that we don't have the go live for another just under 2 years. So we do have time to get a better understanding of exactly what this does mean to our community. And certainly I'll share Councillors Barrett in terms of trying to make the best of what's in front of us. And I'll be pushing for options that are favourable for our community. At the moment, I don't think this overall proposal is that favourable for our community, especially not for the next 10 years. And that is my primary concern at the moment. So I can't support it, although I realise we do need to have a plan, but I'm certainly not happy with the path that we're on.
Councillor Johnson.
Unlike others, it's fairly clear to me, the efficiencies. I think they were clearly outlined in the paper. You know, we're looking at 106 million saving over 10 years. That's a very clear efficiency to me. I'm not sure what extra efficiencies people are looking for, and that's a conservative view as well. Could actually be better than that. In terms of what we need to explain to our community, I'm just going to push back against this idea that somehow we've got to explain to them that their bill has gone from 900 and whatever to 2,500. If we didn't adopt this water services plan going forward, they would be paying an extra 1,000 by year 10. It would be 3,500. So surely, well, anyway, it seems to me very clear efficiencies, both in the amount that people have to pay, in the amount of debt that will be ensued. And, you know, I obviously am not 100% on board with the way that government's gone about this. I don't think any of us are. But ultimately, I think, as the Mayor has pointed out, you know, successive governments have indicated that economies of scale are there, and we should be looking to get as many water services connections as we can together to benefit from the economies of scale. We've done our best. We'll be at or around about the 50,000 connections. That is what government recommended. So I do see efficiencies. I see us conforming to what's a required change. I understand people don't like change, but, you know, there really is no alternative for us here. And I push back against this single council CCO. There might have been some savings in the first few years, but after year 10 there was no saving, and we're here to take a long-term view. We're here to put an arrangement in place that will benefit the community in the long term. And there would have been no advantage to us out on our own as a single council CCO, unable to retain staff, unable to get supplies of services, unable to compete against much bigger water entities. So, you know, we've just got to be sensible about this. It seems to me very clear. It's not actually at this point a difficult decision at all, in my mind. And I'm really grateful that we've had staff that have been so diligent and have worked so hard that we've got a reasonable water services plan to put to government by the deadline. So let's be grateful for that. Thank you.
Councillor McLeod.
Thank you, Mr. Chair. Councillor Johnson just highlighted a lot of points that I was going to make, especially around the benefits of these water reforms. And I think my views are not hidden. I've expressed those views over the course of every time we've explored this topic. And I think one of the reasons why I am in favour of the recommendations before us, is simply because, number one, it's a direction coming from central government, irregardless of the colours of the government, but they've signalled over time and time again that this is the direction that we are heading in terms of water reforms or the operation of the three waters that every council has. And the benefits that comes with this is simply around the economies of scales. And as Councillor Johnson highlighted early on and has reported in the report, we're saving over 160 million plus over 10 years in savings. In savings, that's beneficial for the community. This is the kind of forward thinking that we need to have in mind when making these decisions, not the short-term thinking that we, in terms of what we're standing to benefit in the next 2, 3, or 5 years. But let's look at the overall bigger picture. Over 10 years, we're saving around $160 million in savings. 100 what? Sorry, 160. Sorry. And then there's the economies of scale as well. which allows us and gives us more headroom for borrowing, should we need it in the future. And also there's a potential for reduced operating costs, which takes the rates burden away from, our ratepayers as well, in a sense that in terms of reduced overhead costs and also reduced operating costs that comes with us being part of a CCO or joining together with the other councils as well, as opposed to being a standalone, which will be much more costlier in years to come. So for that reason, this is why I'm supporting this. Personally, I'm not quite happy with what the government is doing at the moment, which is, they're asking us to do all of these things, and we don't have all the information in front of us. And for our staff, it's quite unfair because it feels like they're flying an aircraft and at the same time fixing it as it's flying, in a sense. But overall, when we look at the benefits that will come to the community, I'll stand here 10 years if I'm still here and tell the community that, this is, I was happy to make that decision, and these are the reasons why I made that decision, and these are the results probably that's coming. That the community was stood to benefit from those, and hopefully we'll see those benefits in the years to come. So those are the reasons why we're supporting this.
Councillor Arnott.
Thank you, sir. Having read thousands of pages about water the last 3 years, I'm feeling a bit watered out. Look, I'm feeling a bit, quite relaxed about this, more relaxed than I was. As it's been said, everything points scale is cheaper. So I'll be voting for this today. Thank you to officers for the massive amount of work that's gone on here. And, this is the biggest decision the city's probably ever going to have to make. There's options to exit, so I'm feeling more than comfortable about this decision today. Thank you.
Well, thanks, colleagues. I think Councillor Arnott did sum it up, and it is a massive decision for us and something that we shouldn't be taking lightly. But let's influence what we can influence, and this is certainly one way of doing that. And please, can I ask you, take your colours off, take your views around apples versus oranges. Please do look at this in the right light. It has to be better than the status quo, absolutely has to be. So if I could ask you to vote, and we'll do that now, please. And that has passed 11 votes for and 2 against. Okay, we'll re-vote. It's a fairly big one to be on record. I'll ask you to vote again, please. And that has passed 11 votes for and 3 against. All right, thank you. All right, we will now be moving into number 7 on our order paper is moving into part 2, and we'll be doing that around third-party commercial and around commercial activities, and then around negotiations. So I'm happy to move that, seconded by Councillor Hancock. If I ask you to vote, please. That has passed 12 votes for and none against. Right,